Okay, so it's good to give you another dose of interesting technical analysis. Now, people always ask me, are you a fundamental analyst or technical analyst or both? Or which one is better? Okay, I'm not a fundamental analyst. I'm not a technical analyst. What I do is I am a trader. If you are a trader in the market, you know, if you have been in this market for a long time and you have been following my analysis, you would know that trading requires 90% technical analysis, 10% fundamental. Investment requires 90% fundamental, 10% technical. So it's not a question of whether you are a fundamental analyst or technical analyst or which of them is better. It's best to understand your trading style. What are you doing in the market? Are you a trader or are you an investor? If you are investing in the market, you require you have a lot of work to do when it comes to analyzing a stock. Fundamental analysis, cash flow, revenue, profits, fair value calculation, macroeconomic indicators, and everything that you need to know whether a company will continue to survive, whether they have the capacity to withstand external shock. But if you are a trader, you don't really need all that. You just need a bit of that. What you need more is technical analysis because you are in the market for capital appreciation. So, what drives capital appreciation is demand and supply. So, if demand outweighs supply, what happens? Price goes up. If supply outweighs demand, price comes down. It's as simple as that. So, there's no complex argument on whether technical is better than fundamental or fundamental. It's just for you to understand what you are doing in the market, and that will tell you what to do. So if you're in the market to trade, then technical is a must for you because technical analysis will help you understand price actions, demand, and supply, and whether buyers are in charge of the market or sellers. So once you understand this, then you are good to go. So in this video, I'm going to share my reasons and why I think Guinness might hit 50 naira. So between 50 naira and 58 naira. So if it's going to hit my high cap limit, I'm looking at 58 naira. But if you're looking at my low limit, they will look at least 50 naira. Now, why did I say so? I'm going to share my reasons with you. But first, let's look at the overall market. You know, I like to talk about the NSC index before individual stocks because someone shared a comment with me sometimes ago. It was like, I thought you said the market will go down. So why are you now asking us to buy? Is that not contradicting your analysis? I said, okay, I'm going to talk about that in this video. So this is NSC or share index NGS. Now you've always seen how I mentioned the ceiling, which is the fact that the market is at overbought region, and I'm still insisting that it's overbought. Nobody can time the exact period the dip will happen, but you need to be very careful. Even though we've had some rally in the past days, past week or 2 weeks or thereabout, you might think, oh, NSA or share index is still going up. You need to be very careful because sometimes this rally might not actually be driven by the overall market. It might just be few companies that are driving this index at this point. So this honest NSC or share index. Now I want to show you something on the daily charts. Now this is the index at this point. Now notice before the this last rally that we've had from 31st of December, you can see how NSE has had a rally from 41,700 basis points to 43,000. Now before this rally, we also had previous rally from 38,000 to this point. Now I am seeing the formation of a double top at this point. Look at it here, a double top. Notice how the index rallied to this point before it pulls back. Now we are seeing another rally to that same region, which is like double top. Before yesterday, the index closed by 0.09%, which is this. So this calls for here. Now, is the strength that push this index from this region to this place same as the one that pushed this from this region? If you go back to check your MACD, that tells me that they are not the same. Now look at the rally from this point to this point from the MACD. This you can see here how it lasted for a long time, but here it's not as the same. So I'm seeing what I call a bearish divergence. A bearish divergence from here. So a bearish divergence is characterized by higher price and lower MACD, or you can see here. So you can see, so this is like from, you can see from double top the base divergence. So the strength of this rally from here to this section, which is this, is not the same as this. So that means you need to be very careful at this point, because this might call for a pullback. So when I see a pullback very soon, I mean not going to be more than 2 weeks from now, we're going to see a pullback in the NSE All Share Index. So that's NSE All Share Index for you. So let's quickly look at Guinness. Now, Guinness is one of the stocks I recommended for 2022, and this stock has a lot of upside potential as it is right now. Now, from the charts, let me take you to the monthly chart. Now, I like to talk about demand and supply and how that it's very smart to buy a stock that is emerging from the bottom and not the one that is at the top of the market. Now, look at how Guinness has emerged successfully from the bottom. You can see right here. Although, just like I said before, there is a resistance at this 50-day moving average, which is this, and 50 days moving average right here is 47. So around 47. So that's why I said Guinness might touch 50. And look at the previous support level, which is now going to be turned, which is going to be a resistance, and that's it at 58. So take plus or minus, I see 50, between 50 to 58 as a key level on Guinness. Now, what do you think will happen once it touches this region between 50 and 58? We're going to see a pullback on Guinness. Now, when that pullback occur, the 20 days moving average will likely serve as a support. 20 days moving average will serve as a support on that pullback. And then what happened? The next rally will happen. So if I'm going to use the same technical analysis on WAPCO, although they are in different industry, but most times this technical analysis tends to play out several times. I've seen it. Now notice how WAPCO had showed the same pattern. You can see the rally from the bottom. It found resistance at the 50 days or the previous support, now turn resistance. Then you can see how it pulls back close to these 20 days. And right now, WAPCO is now showing a huge uptrend. Now, this is the uptrend that I think might break above this 20, 30. It might take WAPCO back to 30 and could probably extend beyond that if they continue to release impressive results. So I think that's my play out on Guinness stock. We are going to see Guinness rally to 50 to 58, then a brief pullback. So if you're playing this stock as a trader, I'll advise that you probably that's if you want to hold for a short time, like 3 months or thereabouts, or if the profits actually hit the minimum targets you're looking for. So you might likely want to sell off at this point, then wait for a brief pullback, then jump on another. Like I said, Guinness is going to be a winner in 2022. Now let's also look at some of the setup that's supporting my analysis. Now, can you see how Guinness has largely traded below the 20 days since 2018? You can see here with the 20 days below the 50 below the 150 and 100. Can you see the massive dip? Now, all the averages are now showing fresh cross to the upside with the price now above the 20 days, 20 days above the 50 days, 50 above the 100, and then you see that the 100 should be crossing the 150 very soon. So, and then going by the resistance that I've drawn, you can see around 53, but I'm looking at 50. So that tells you that Guinness is on a clear path to hitting 50 naira. So 50 naira to 58 naira, it's a modest target for me. And if you calculate from today's closing price of that's 9 naira divided by 41, that should give you over 21% return. So between 21 depending on where it goes. If it's going to 58, 17 divided by 41, that is like 41. So between 21 to 41% ROI, that is the upside potential that we have right from this place. Because this cross, you can see the last time we had a cross to the downside. Notice the massive drop. So this is going to happen. We're going to see a massive run up on Guinness this year. With this fresh cross that is happening, it means there's a huge upside potential right now. So even though this might serve as a resistance in the short term, it's not going to hold the stock back. So this is why I think Guinness is a buy right now. So I just had to share this brief technical analysis to explain why Guinness remains a strong stock to hold on to. I did not talk about fundamentals. Why? Because I look at emotions, I look at price actions sometimes because I'm a trader in this market. I'm not going to do all the whole big. I'm looking at what traders are doing, what they think about the stock right now. And this whole technical analysis already tells me that because the 20 days, 50 days, 100 days, 150 days are all aligning. So that tells me that there's a change. There's a confirmed change in sentiment right now. Sentiment is turning bullish. So that's going to drive Guinness in the short term. So this is what my analysis on Guinness is right now. So feel free to share your comments. If you have Guinness stock, let me know so we can talk about this stock and what you think. So thank you so much. Please don't forget to like my to subscribe to my YouTube channel and also share this video.